Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
The Russia-Ukraine conflict is entering into a new phase with negotiations about to take place in Saudi Arabia. Europe expected to spend more in its defense sector as US expedites normalization of its relations with Russia. On the markets front, the Reserve Bank of Australia is meeting today for possibly its first rate cut since beginning in the rate hike cycle. Markets in Asia are more or less stable ahead of this event. Good morning, JK. A lot of moving parts for markets today. How are you reading all of this?
Good morning, Swaraj. Yeah, it was a US holiday, but a lot of things are building, no doubt, on the geopolitical front as well as on the uh, domestic politics and monetary policy also. On the geopolitical front, as you said, the talks will be resumed, starting in Saudi Arabia between US and Russia. Europe is probably not going to be a part of the discussion, so that's a very important thing. And in the meantime, Europe is, has decided that they will spend more on defense now. The European Commission has agreed that the defense spending, additional defense spending, will not be part of the fiscal limit that has been set. That's something actually that boosted the German DAX index to a new high yesterday because defense companies will be gainers. Now, apart from that, Germany is also going to an election on the coming Sunday. The February 23rd, and people are hoping that there will be a strong government in place, but the prospects are not very bright because the populist opposition is also expected to have enough seats to stall any major economic agenda. So that's not a good news as far as Germany is concerned, but we'll wait till the election results are out. And then, of course, we have these monetary policy decisions, both from Australia and New Zealand. Now, Australia was one which has risen its policy rates by 13 times from 0.1%. That was the last cut in 2020. And 13 times they have increased the rate. It now currently reads at 4.35%. And this cycle may be one of the shortest cycle because the interest rate cycle in US is also stalling. Possibly, there may be no rate cuts in US, and they will wait to see how the inflation evolves in the coming days. So this is something that we'll watch out from the statements of the RBI governor. And of course, New Zealand is also expected to cut rate. New Zealand economy has been slowing down, so there will be 0.5% cut tomorrow. So that's on the monetary policy front. On the Indian side, we had the trade deficit number that was published yesterday, and month on month, we have had some improvement in the overall trade deficit by about $4 billion. But on an year-on-year basis, the overall trade deficit has slightly increased. The good part is that the services exports have done very well. Net service surplus has gone up by about $4 billion. Actually, that is making up for the deficit that has come in the commodity side or the goods trade deficit. Now, that more important than the actual numbers is how the US trade with the US, India's trade with US has been evolving. India's exports to US rose by 39% in the year, and during 21 to 24, America has been the largest trading partner of India. This assumes a lot of importance in the context of a reciprocal tariff that the US is proposing to levy on all countries. That means India will have a big implication out of this. So, how the exports will perform if this becomes a reality, or whether Indian government will further negotiate and give some other reciprocal points to the in favor of the US so that the levies are not made, is something that we want to wait and see. Apart from the overall deficit number, I think the developments on the trade with US assumes a lot of importance. On the currency front, while dollar index remained in a very narrow range, because normally that's what happens in a US holiday time, but yen continued to gain, because of the strong data that we have seen yesterday on GDP. Rate hike prospects are increasing. The yields in Japan on the long bonds are also on the rise. Euro has not built on its gain above 1.05, and it's been slowly drifting down. Of course, this can be due to the impending uncertainty about the elections coming up in Germany during the weekend. On the rupee, there was a minor dip to start with, but in line with the dollar index fall. But there was steady rise as foreign banks were bidding, and this was more probably due to the outflow of FIs that has continued. Yesterday also we had seen outflow of nearly $400 million. Now we have $12 billion of outflow that has been seen from the FIs for the equities alone, and more overall outflow, including bonds, which has seen some inflow, is around $11 billion. Although the stock market did bounce from the multi-month lows yesterday, the major stock index, but there is no comfort that the market is getting. The downtrend will have to be observed whether it continues from the crucial support that we have seen in the recent times. But FIs don't seem to believe, because they're still looking at the slowdown in the in the Indian economy, lower earnings, as well as the risks of higher tariffs that the US might impose on India as well. So these are keeping the FIs on the negative side of the Indian market, and that keeps the rupee also slightly under pressure. Of course, we will observe whether the market will go above that 87 that has been holding since the last Monday, when it was brought down from 87.95 to a much lower level by RBI through intervention. So a quiet day yesterday, but I think a lot to look forward to from today onwards. Thank you.
Thank you, JK. Apart from the monetary policy decision from Australia, where the Reserve Bank of Australia is expected to cut rates for the first time and begin its rate cut cycle, I think the geopolitical developments are also getting quite interesting, with the talks between Russia and US beginning in Saudi Arabia, Europe planning to spend more in its defense, leading to a good rally in DAX. We also have the German elections coming up. So all of this proves to be a very, very interesting time for market participants. On the Indian data front, the trade deficit year on year slightly increased, but month on month it has improved. As JK mentioned, services side data remains strong. And one important thing, again, picking from what JK had said, is that India's export to US rose by 39% during the year, and US remains an important trade partner. So this, in the context of reciprocal tariffs, is very important, and how India negotiates with the US will also be seen. For currencies, I think dollar index was in a narrow range due to a US holiday. Yen continued to gain as strong GDP number pushed yields higher. For rupee, we saw minor strength initially, but then weakened subsequently as FII outflows continued yesterday to the tune of $400 million. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.